Welcome to the Accendo Traders Group. This is our video weekend wrap-up trade plan for July 20th, 2008. AccendoTraders.com, effective trade plans delivered daily. Each time we get together, we have a routine. This is our weekend routine where we want to make sure we're on the right side of our trades, make sure we know what's coming down the pipe as far as news, see what some of the experts say about the market, looking at their commentary, and obviously we want to look at the sectors to see what is and is not trending. And we want to make sure that we always have time to spend with our families. This week, we had the market ending up. All the major indexes were up for this week, which is certainly a nice change. The market was kind of all over the place. We had earnings reports this week. We had some economic data. We even had some testimony before the Senate, some government testimony. And we had a turn in our energy, a turn in our oil, a reversal. So when we look at our corporate headlines this week, we had financials starting off a little slow with IndyMac and the failure, the government taking over there, the FDIC taking over. But then on Wednesday, we have Wells Fargo beat expectations, but more importantly, they raised their dividends. So they raised the dividend, and that really kind of started the bounce in the financial sector. JP Morgan followed up with a better than expected earnings report. And then on Friday, Citigroup also reported a less than expected loss on Friday. However, that was tapered a bit by the miss on earnings by Microsoft and Google. So the NASDAQ was down on Friday. But again, now the financials are participating and they're rallying. You're seeing the S&P start to move because the financial sector, the heaviest weighted sector in the S&P 500, is participating in this bounce. We'll talk about follow-through later when we talk about the commentaries and we get to the charts. With the government and the economic data, not much going on there. What was important is that Secretary Paulson came out and basically guaranteed Freddie Mac and Fannie Mae's debt, giving them a blank check. Bernanke also testified this week, but he really didn't give us anything new, nothing we haven't heard before. However, both Bernanke and Paulson talked a lot about the GSEs. Again, as we talked about oil, finally reversing. We went from a high of 146 down to 128. And basically there's worries about whether or not demand is going to keep up. You know, when you hear all this talk, oh, it's the speculators. And then you hear other talk, oh, it's China and India. Their demand is so high. And then we had some bearish reports out of the Wednesday crude inventories and some easing in the geopolitical tensions around the world. I don't know. It's all hype as far as I'm concerned. This week we got leading indicators on Monday, nothing on Tuesday, crude and Fed base books, so we'll get some inflation data on Wednesday, initial claims on Thursday and Friday, durable orders, new homes, Michigan sentiment. So I think we're going to have another week where we're not led by economic data. I think we're going to see earnings once again take a forefront. You can see tomorrow we have Apple after the close, certainly big news. We may see in this earnings a little bit about what happened on the release of the iPhone, although I don't actually, I'm take it back, that wouldn't be in this report because June 30th ended that. But so Apple's going to certainly have a big play. You can see also this week we got Baker Hughes, Caterpillar, CME, Wachovia Bank, Yahoo, Boeing, BTU, and a ton more. So we got a lot of earnings this week. It's really probably going to be the driver, what's going to send the market one way or the other. And if we have this trend of beating expectations, we may see a bounce here. So now that we have an idea what the market's doing this week as far as news, let's go ahead and take a look at our sectors to see if we can find some trends that we want to play. As we begin to look at our sectors, and for our YouTube folks, I'm going to kind of go through this quickly because of our time. I'm going to start off and just kind of highlight some of the ones that are catching my eyes. We've got agriculture, certainly looking bearish, falling right back down. So you can see definitely a sort of a key support area that we're coming into in this 350 range. Next up are the metals. You can see obviously looking bearish there also, steel and iron looking bearish. But on the bullish side, and that's really the three that really jump out at me as bearish. There's a fourth one that we'll get to. We also have gold on the bullish side. Just from the standpoint of, you can see a nice trend line that we could draw here. And then either we're going to go down or we're going to go up, bounce off this 50. So gold could go either way here. Banking, obviously this week has been a good week for it. We want to see it break the 50 here though before we go bullish. Same thing with all of these financials, looking very nice, but confirmation of our bullish trend will be above that 50. Drugs look really nice. Choppy, but they definitely look nice. Biotech looks nice. Again, you can see trucking looks nice here. Railroads, if they can break up at a 50, will look nice also. Semiconductors look nice. And as I said earlier, internets are looking bearish. And now it's time to begin the education portion of our video. And we've been using the book Trading in the Zone by Mark Douglas, Taking Responsibility is a chapter on, and we're talking about reacting to loss. And, this has been a recurring theme about, why you should develop a trade plan, why you should focus on the psychology of trading, is, again, it comes down to what does a person do when they lose money? What do they do when they win money? How do they respond to all of this? And right now, Mark is talking about how to react to loss. And, he's obviously saying that we all think that we take responsibility for our trades when we execute them. But the question is, do we really do that? Are you, satisfied? Not satisfied. What are your reactions going to be when you actually lose money? What are you going to sulk and say that the market's out against you? Or are you going to just say, all right, that's just a part of the being a trader, and I'm going to keep moving on. The way I like to look at it is, quarterbacks. We've got all this talk right now going on in the media about Brett Favre, and we all have our favorite quarterbacks. But when you really look at it, our quarterbacks, the best of the best, are mid 60%, maybe 70%. I believe the record is around 74%. Dante Culpepper had that. Peyton Manning had that. Low 70% for completion percentage for a season. Most are good ones are in the 60s, and you're happy for the worst of the worst to be in your 50%, the upper 50%. What is my point? I want my percentage. I would love for it to be 100%, but I'm happy when I'm at 70, 60% of winners. Because the key here is not about whether or not you win every trade. The key is, what are you doing when you're losing your trades? Do you have a system in place with stops or whatever to get out of trades when they're wrong? Do you have a system in place that says, when I see this, I'm out? Or do you just let it ride? And that could be your system. That's okay. But do you have anything at all? And the reason I say that is that with our quarterbacks, the question is those completions, those passes that you make that do not go through. Are they pick sixes? Did the defense get them and run for a touchdown? Or are they just, incompletions that batted down? I want incompletions. I don't want them to affect my team. I don't want the score to be affected. I don't even care if it's third down and I have to punt. That's okay, because the game goes on. But if you're Brett Favre and you throw a pick six to end your team's chances of being at the Super Bowl, game over. Matt Hasselbeck against Green Bay, you throw a pick six in the playoffs, game over. I don't want game over. So you have to have a system in place so that when you throw the ball and it's just incomplete, hit the ground, move on. We want to live to play again. We want to live to trade again. So, you have to get over the fact that the market does not act like society. The market does not care about you. It cares about your money. It really wants to take your money. So the question is, are you going to let it? So again, think about it as a quarterback. Do you have a pick six when it goes wrong, or do you just let the ball hit the ground and everybody moves on? As always, I want to thank everybody for watching it. To get the full podcast, you got to go up here to subscribepodcast.html. That is the 30-minute video that we release every weekend. It's got our new trades of the week. It's got our commentary about everything. So go ahead and pick that up. If you're ready to step up and participate and be one of our subscribers, we humbly appreciate that. Those who are taking the time to get our Monday through Friday trade plans. Again, emphasize on that you see it. It's not just you reading it and trying to visualize what they're saying. With our video trade plans, you see what we're talking about, and you're able to put your alerts and see what we're doing and follow us exactly and have an understanding. We appreciate those people who give us feedback so we know who our subscribers are and people who are watching our videos. And as always, check out our blog. We continue to put our videos on there and great articles on there, blogs at accendotraders.com. I will see you guys next time. Trade at your own risk.